I hope nobody gets upset, but like, what are real estate agents doing to actually make the money nowadays? I think real estate agents are going to become obsolete. And I know that's probably not a very popular opinion. And I think there are wonderful real estate agents who do really well and know what they're doing. And I think some of those will continue to succeed.
Mm-hmm.
I think in general that is going to become an obsolete market, and it's going to become more of either a flat rate or a capped market, unless you're going to hit a certain type of property or a certain maybe dollar amount.
Unless you can offer some real advisory, it could very much change things. Welcome to the Debt Doctor podcast, where we deliver the definitive prescription for navigating distressed real estate debt. I'm your host and America's most qualified debt doctor, Bill Bymel. I've spent my career investing in, diagnosing, and reviving thousands of distressed real estate situations. The Debt Doctor prescribes proprietary remedies to help you identify, acquire, and monetize undervalued real estate assets. Each episode gives you insider access to the strategies top cohorts use to transform market volatility into double-digit returns. If you enjoy what you hear today, hit the follow button, subscribe so you don't miss an episode, and please share your support with a quick review. You can find me on the web at billbymel.com. Thanks for joining this episode of The Debt Doctor. Jacquelyn Cayon, welcome to The Debt Doctor. Thank you for being here.
Thank you for having me. I'm excited to be here.
I have to say, since we met, I just can't wait to talk every time we talk, because I haven't met someone who has as much energy and spice and loves distressed debt situations as much as I do. I know that's not very sexy, but
I kind of love that you describe it that way.
It is a little strange, right?
A little strange, but a little fun. I mean, I think we're a unique set of people. We can say that.
Yeah, for sure. Well, tell us who you are, because I know you will do a much better job of introducing yourself. When I look at your resume, I'm in awe of you, what you've done in your career. Tell us who you are. You're currently with a major bank.
Yes, yeah. So I'm Jacquelyn Cayon. I currently work for JP Morgan Chase. So I work in the global supplier area, and I oversee all entities the bank owns from a loan services perspective. So that essentially means that I oversee Chase originations, correspondent servicing, private bank originations, which is our asset wealth management arm, as well as bank originations and servicing for our commercial investment bank.
And you come from even larger, well, just as large. Tell us, before JP Morgan, you had a history. I think you were at Fannie. How did you get into this industry of all things?
I will say I fell into it. So not to age or date myself, but when I graduated undergrad, it was during, the distressed economy time, and a lot of companies weren't hiring. And so I kind of honestly fell into the industry. I wound up working for a company at the point in time that was providing services to the industry, called Wingspan Portfolio Advisors. I actually grew with them from one office and 200 people to over 2,000 people and 6 offices nationwide. So I started there, and I actually built all of servicing oversight, Radiance mortgage insurance curtailment process, HSBC seed and lieu process, attorney reviews. I did the WAMU versus US Bank lawsuit and fraud and origination underwriting. So I was kind of called on to build a lot of processes from the ground up, and kind of found that I was really good at it.
Every time we talk about it, I think, oh my gosh, I wish I could afford to hire you. Well,
Well, I mean, we can talk about it. I can give you
Uh,
a number.
that's right. I'm sure you will. Well, I mean, who's better than Jamie Dimon, though? I mean, it's a great organization that you're at now, right?
Yeah, it's really great. They're very interesting. I mean, they're definitely large and doing new and different things in the market. I would say even on the origination spectrum, right? It's really Chase and Rocket that are
Let's
looking.
let's get into the processes because I know we're speaking pretty broadly, and it amazes me because one of the things I think, in getting back to what attracts me us, is that I have what got me interested in buying notes, buying NPL, and working with distressed borrowers was how bad servicing was, especially pre GFC. As we got into the GFC and you started to deal with the Saxon mortgages of the world, and the really insane servicing and loss mitigation practices that went on, I felt like, gosh, there's got to be a better mousetrap. And you are actually in that world. I mean, I've gone on to manage portfolios that never grew to more than a couple $100 million in size. You're managing multi-billion-dollar portfolios, which means that you're talking about thousands, tens of thousands, not just a couple hundred or 1,000 or 2,000 loans like I deal with. I mean, how do you look at things? First, that's a lot I'm just dumping on there, but and it's not necessarily a specific question, but I think where I'm getting, like in terms of how do you manage treating all your customer, getting the processes right? I mean, why are you so good at this?
Yeah, well, like you said, I my background came from building processes from the ground up. I worked for originators, subservicers, banks. I took a mortgage company to becoming a bank, and transitioning their processes. And I would say from my background, it's a bit different. And part of the reason why I've been so successful in doing it is the fact that I've never been siloed in the industry. So, I think in a lot of cases, we put people in an area and they don't understand the entirety of a process
Mm,
or a situation. And I think that's when you start getting into some of the misunderstandings in relation to things. Um,
yeah.
so I think for me, I've always done everything end to end. So I've owned everything from originations through REO. So I know a little about a lot is always the way I describe myself. I just know.
The more I know, the more I know how little I know.
So for me, I think it's just more of the fact that like servicing had been a space where there weren't a lot of investments made. And it is kind of a space where it's hard to make money on an ongoing basis without scale
Right.
and without having large numbers of assets. And that becomes where you see the struggle of the servicers and the ability, right? Because a lot of them are sub-servicing on behalf of somebody, which means that there's even smaller margins involved in a lot of cases. And
Hmm.
because they don't have the front end business of an origination shop, that is where like the bulk of the money within the industry is made.
Interesting. Very interesting. And that's such how many sub-servicers do you actually deal with the sub-servicing at Chase as well? How many is there a huge number of them that you're dealing with, or is that something that you're dealing with?
They do both. So they have servicing in house and they subservice. So a mix of both, not a large number though. Kind of a small select number in relation to what they've decided from a strategy on subservicing. But I've also worked for subservicers. So I, oversaw Rushmore, Roosevelt, and Dakota. I went in to build their third party risk management program process. Following the CFPB exit, I was sought by them to come in and restructure them. So worked for a subservicer there. When I was at Pacific Union and prior to it being purchased by Mr. Cooper, I brought their subservicing portfolio back in house from being at Mule. So
Mm.
structure internally for them. And then I was also at Loan Care, who's owned by Fidelity National Financial and is a subservicer as well.
You were like the secret fixer extraordinaire. I'm actually thinking that maybe we shouldn't actually publish this podcast because I want to keep you as a
They keep
secret
me
for
hidden
myself.
from everybody.
What do you have any views of the industry? I mean, I love that, well, your perspective that you have touched every aspect. That's what makes you a great leader of all of this and makes you have a perspective. I'm like that myself. I've bought real estate. I've developed it. I've been a broker. I've been a loan originator. I've been knocked on doors from 2008 to 2010 and was talking to borrowers directly. So, and so I've been, and I've, so I feel like when you have that full perspective, you gain a different perspective. Like, what's like an unpopular opinion or something that you see about the industry that maybe others don't hold as, like, I love looking for fallacies. What would you like to see change?
I mean, I feel like that's a loaded question, but
Don't worry, you won't get in trouble. No.
I, personally, I do have some probably opinions that are not they're not going to be your standard popular opinion.
Yeah.
And I started saying it during, I think, 2020. And I even have said it on a webinar. I don't think REO will ever be what REO once was. I think it's going, even if we have something occur, it's going to look very different than it ever did historically.
And
I don't think that will happen in the same shape or form that people are kind of believing and predicting that it will.
And to say more about that, like, in what way will it be? You're saying that if we have stress in the market, you're not going to see thousands or hundreds of thousands of homes going all the way to the REO stage.
No, I think that there will be a lot of upfront intervention. I think everybody will be very cautious before they move forward in any type of truthful action. I don't think it will become, but I also think what we're dealing with that's different than what they dealt with in like a 2008 is we have a really educated consumer. And what I kind of personally made up the term, but I call it the HGTV effect,
Yes.
where everybody thinks that they can like renovate or they can fix and flip
Hmm.
or they want to do an Airbnb rental property, right? Because this idea has now been put on, right, TV and social media. And people look at the numbers that somebody's putting up on the screen and they're like, oh, well, I could do that. Well, that
Hmm.
makes sense. And so I think that you're also, even at a state of foreclosure things, you're going to have a much more competitive market where you won't see true REO in the state that it's going to revert to the investor versus going via a third party sale. And
Hmm.
that's because the internet wasn't what it was then. Right. And so now there's more education, there's all these things out there, and there's people attempting to educate the general public that, oh, you can go do it. So I think that also will come into play that, everybody's going to think that they can go get. Yes.
I I think you really touched on something there. I am going to steal HDTV, and we're going to start to broaden this as the created by you term. You'll always get the royalties, um, because you're right. I mean, it's kind of similar to when your landscaper was telling you that he was flipping houses back in 2006 there, and that's something I agree is going forward will continue, but it's also an interesting cohort to look at right now that might be facing some distress, because if folks took bridge loans, and I actually call it the TikTok generation of real estate, because there's a whole world, like there were like sales that go on TikTok that I never even knew existed, that whole thing. um and I think that there's a cohort that exists right now that's white knuckling it, that is in these Airbnbs because they bought in 21 when the numbers were crazy and the interest rates were low. And no, not as many people are traveling anymore. There's been kind of a backlash to the Airbnb model. There's just a lot of naivety. like you say, they see it on TV and it's like, oh, I could do that. That's easy. I wonder how many of those people exist right now that are in that, like that's where the stress could come from. And then the next group of HGTV investors will be the ones that buy them out through short sales or things like that, bailout money.
Yeah, and I think that's the other thing, right? Is we've been in such an upturn of the market. If everything is quote unquote where everybody says it's been from an asset perspective in the real estate industry overall, the downturn's going to create a correction, but it's more so going to create a short sale.
Mm-hmm.
It's not necessarily going to create a truly place where something is in that type of
Upside down, yeah.
upside down, full distressed asset, right? So I think there's some differences, right? Because if we've been in this really high market, then people are going to start looking at these properties as number one, either it's right sized, so they can't afford it now, or that they're going to get a good deal on something. So I think you're going to have a lot of the short sale. I think you could have a lot of distress in the Airbnb area just due to the backlash and saturation in the Airbnb market, if we're being real honest.
Right,
It's
right,
a highly saturated market.
for
And
sure.
a lot of it, I do think that their model is being overcharged. Sometimes I look at them and I'm like, huh? And I still have to make my own bed. Like the person from the hotel doesn't come in and help me do that.
Exactly. It makes sense for families, if you want to be in if you have especially a big family that was traveling, you don't want to have separate rooms, you have young kids, things like that. But it really does, like, it just doesn't make sense. I've gone back to hotels most of the time.
Yeah, so I think it depends on the area and the goal. I'll say that I have a friend and he has an entire company that he's changed into more of the Airbnb perspective. And their model has changed from they kind of bought, but they will no longer buy and renovate. And so they only build from the ground up
Oh, wow.
because of the appreciation that they actually
Int-
receive in that case, that it's a much better model for them. And he's only looking in targeted high-end markets to only build high-end properties. And they have an entire methodology around like how they're
Wow. Yeah. And I think that ultimately is where Airbnb probably is going. You see more and more of I do admit that I travel so much that I end up in Airbnbs every once in a while, at least a couple times a quarter. But mostly I try to do the hotels. And, you're seeing more of them owned by corporate owners or people that are, because of the scale or whatever it is, professionality behind it. The mom and pops are having a tougher time with that market. Do you also oversee commercial portfolio as well?
yes.
So there is a chance for a little, I mean, I would correct me if I'm wrong. Commercial in some cases because of the dramatic rate flux from 5 years, 4 years ago, whatever, 3 years ago. You literally saw, if you go from a 3% to a 6%, a doubling of mortgage rates. The effect on the commercial market is kind of a double whammy because the overall price of things goes down because the cap rate expectations of new buyers goes up. And then you've also got some of those properties that are mortgaged commercial properties looking at either a floating rate or coming up on their maturity and needing to be refinanced. So you're getting a squeeze on the cost of the capital if they are mortgaged. There are some scenarios, and we're seeing big ones get every once in a while coming up on the news, where the commercial debt is upside down. Do you have any concerns there? How do you think all that plays out?
So everybody looked at the residential market when 2020 happened. And my response was, I don't know why we're looking at residential and not commercial. And I
Hmm.
always thought that the majority of the issues that would come out of that 2020 flux, no matter, and it would take longer, we're going to be in the commercial side because of the effects that everything has had. So to me, I've always said that was the side to watch. And even Fannie and Freddie do have commercial assets and they lend on more like larger multifamily, which are really considered more of a commercial perspective. in that side of it. So there are those that do exist even for the GSEs at this case. So I think the commercial can be one of those places where it's going to be difficult because even if they're like a commercial apartment complex with the attempt to rent, right, we're still hitting that issue with rent capping out nowadays, right? And people not being able to afford rent. So it's not even just affordability, right, in residential. The inability to afford the rent is coming in the commercial side. And then what's going to come into the commercial play too now is as we talk about the economy and the scale and the increase of debt overall, and that consumers are getting stretched from a money perspective, right? Travel is going to be affected, which that's going to go in and affect a lot of the commercial too, right? Because it's going to affect travel. It's going to affect families going places. It's going to affect people going out and spending money
Mhm.
into spending money at home. So I've always said that. And I said it back in 2020 when everyone just wanted to talk about residential. I was like, residential is going to be fine.
I'm glad I asked you that question. And it just, the more I listen to you, the more I get excited about your views on the world. It's just so
Unpopular
brilliant.
popular opinions.
No, I mean, it's brilliant. I totally agree with all of that. It's just so in line. It's like, we were like walking parallel paths in lives or something like that. One more unpopular opinion. Give me one more. Give us one more unpopular opinion. And it could be about the industry or about, anything.
I'll give you two because I think
Yay! I
they
love it.
can. Nobody come after me for these.
I know.
Um, I think real estate agents are going to become obsolete.
Mm.
And I know that's probably not a very popular opinion. And I think there are wonderful real estate agents who do really well and know what they're doing. And I think some of those will continue to succeed.
Hmm.
I think in general that is going to become an obsolete market and it's going to become more of either a flat rate or a capped market unless you're going to hit a certain type of property or a certain maybe dollar amount depending upon. And I think that's because you're also looking at affordability and the affordability to get people in. And again, I hope nobody gets upset, but there's a lot of times where I've seen like that like what are real estate agents doing to actually make the money nowadays, right? They're creating automated feeds that go to your email based upon your preferences from NMLS, and you're basically telling them what you want to see, or you're out there looking at the general market on your own on the internet because everybody can nowadays. So I'm really need a real estate agent because I need somebody to open a door on a lockbox more than anything. I don't need anything. And that from that side of it, the contract's a fill in the blank contract on real estate.
Yeah. I mean, yeah, exactly. Even if you look at it from the perspective of um, just the negotiation of the contract, opening a door, and as these values of properties go up, um, then it's justifiable that maybe it should be a 1%, for that job or 2%, whatever it is. And eventually, unless you can offer some real advisory or, you have some brilliance that we are there are, like you said, professionals that are worth what they get paid. Um, it could very much change things. That's okay. Okay, so what's opinion number two? That's
Opinion number
awesome.
two that kind of goes along with opinion number one. And I know you kind of had indicated that your background was in this too. I think that what's going to happen in relation to affordability as well, and just what I've seen in the market, is I think everybody is going to lobby to create some type of licensing requirement that doesn't require an LO.
Mm,
So the big guys that can do it and can afford it and already have the footprint are going to wind up being ahead. Because
mm,
in a lot of cases, right, we're looking at affordability, and a lot of times when you're looking at lenders or what the LOs are making and how much they're getting paid, I've dealt with that, right? I
For
ran a
sure.
retail branch leasing for a lender too. So I dealt with a lot of LOs and that perspective. And I think that, people are going to be like, they're getting paid a lot of money, and to
Right.
help to create affordability or to do things to help the consumer, why can't we do that? And why do I need everybody to have this individual NMLS license? And then I think what that will do is it's good. The effect on the real estate agents is going to affect the LOs because so many LOs rely on real estate referrals for Bymel.
Right. Wow. That is some controversial opinions that really, I'd still love you, but I don't know about everyone else that's going to listen to this, especially since there's a lot of real estate brokers that are my subscribers and friends.
I'm sure
Uh,
they're really good ones, though.
only the best are my friends. Oh my
Like,
gosh, we could talk for hours, but I've got another call. You have meetings, I'm sure. Can we make a plan to get together at some point? And it's been great. How about one positive piece of advice for us? Leave it. No, no. Actually, it can be controversial. I would like that too. One, I never let any guest end without saying, a bold prediction, something like that. If you, a guiding principle, anything that you want to say.
yeah, so I think one of my newest guiding principles that I've kind of found recently that I sort of love, and it plays a lot more into, I'd say, my personal experience than my professional. On that side of it is I found this quote and it said, when you tell everybody I'm the monster in your story, don't forget to tell them what chapter you created me.
I love that.
So that's like kind of my new favorite quote. And it very much goes along with like my personal life and experience. But I kind of love everybody's always going to talk and say something. And that's okay. You're welcome to tell everybody what you believe and feel in your side. But don't forget
Hmm.
them all the things that led up to what happened.
That's right. What it speaks to also is a philosophy of mine that is that we are the creation of everything in our lives. And as much as things seem to happen to us, things happen, and the to us is the story that we make up about it. Right. So, that was great, Jacqueline. Thank you so much. Do people call you Jackie? I don't even know if that's a thing.
No,
No.
but they call me Jax, JAX. So
Oh, I like that. Like,
you call me.
yeah, Jax. Okay, Jax. Thanks for joining me on this afternoon, and we'll talk again soon.
I look forward to it. Thank you for having me.
That's a wrap of today's episode of Debt Doctor. I enjoy bringing this content to you each and every week, and I really appreciate you tuning in. Remember to follow us so you get notified whenever new episodes release. If you haven't already done so, please share one of your favorite episodes with a friend, family, or colleagues. And if you don't mind, leave us a positive review on Apple, Spotify, or whatever your favorite listening platform might be. Until next time, thank you for investing your time with us on The Debt Doctor.